As the clouds of COVID faded, dark times for the oil and gas sector also started going away and things started looking better for them. In March 2020, BSE Oil and Gas Index fell close to 8,700. But since then, it made a comeback and last month in August 2022, it breached the level of 20,000. In the last 2 years, this index has given close to 54% return.
But is this sector still attractive? For that, you have to look at the fundamentals of companies. To assess that, let's look at how these companies performed in the June quarter and what's the outlook ahead.
So the short answer is that oil and gas companies gave mixed performances in the first quarter of FY23. IGL, MGL, Gujarat Gas performed better than expectations. ONGC and RIL performed the worst. While IOC, BPCL and HPCL performed very poorly. Margins of city gas distribution companies like IGL and MGL showed quick recovery due to an increase in price and strong growth in CNG volumes. Quarter-on-quarter gas sales volume of IGL and MGL increased 2% and 9% respectively, and operating margin went up by 20% and 21%. Results of Gujarat Gas were better than expected, but gas sales volume and operating margins were lower by 8% and 13%. In gas transportation companies, on the back of strong profit in gas marketing segment, GAIL neutralized the poor performance of other segments and results came better than estimates. Static petrol diesel prices and huge forex deficit negated the good performance of gross refining margins and oil marketing companies faced a huge loss. Despite strong growth in profits for state-owned upstream oil gas producing companies on the back of higher realization of oil and gas, the results were weaker than the market estimates. Due to poor standalone operating margins, high depreciation and tax rates, the consolidated profit of RIL increased by just 11%, which was below estimates.
Till now, we reviewed the performance, but what lies ahead? Let's look at the outlook of oil and gas companies. Increasing the allocation of APM gas from 85% to 95% for CNG and PNG can be a huge positive for city gas distribution companies, as they will improve the volumes and margins of companies. Domestic gas prices are likely to be capped for city gas distribution companies. If this happens, the burden of high gas expenditure on the gas distribution companies will ease. A sharp increase in domestic gas prices is expected from October 2022.
Due to the windfall tax, there is a concern regarding uncertainties and valuation of government upstream companies. The pressure on crude oil prices will help OMCs to reduce losses on petrol and diesel. Now let us look at the attractive shares in this sector and what are the views of brokerages. Sharekhan has suggested buy on RIL with target price of 3,050 rupees. Similarly, there is buy recommendations on IGL, MGL, GSPL. IGL has fallen 32% from its 52-week high. Similarly, even MGL is 28% lower than its 52-week high.
So overall, we can say that there are a lot of opportunities for investment in the oil and gas sector. However, before making any decision, it is better to consult the SEBI registered advisor.